Welcome to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to episode 169 of the AJ Brown Show. My name is Cyprian Francis, and with me, as always, the guy we named the show after, Mr. AJ Brown. Good morning, AJ. How you doing?
I'm well today,
You
Sip.
know what I was just
Thanks.
thinking as the intro was playing? You must be getting all prepared for the Super Bowl next week. You're gonna be. Oh wait, no, that's the other AJ Brown that's gonna be in the Super Bowl again.
It's true. It's true. That guy has beat me out, especially when you type AJ Brown into
I
Google. That guy
feel like
has
I
been
lost
my
AJ
arch nemesis.
there for a second. Oh, or our connection. Okay. We're
Are,
back.
am I
And
am I back?
so Mr. AJ Brown was in the Super Bowl 2 years ago. He's back. We're back. Um, I got to root for him, right?
You do. You just do. He's related.
And if he makes like a big Super Bowl catch, then we're definitely going to get some SEO love on that. However, last day of the month, January 31st, we went with the America Liberty background because there's a lot going on politically in the markets. President Trump is causing a stir every day. We're getting some economic news. Where do you want to begin today's show? Because I know Monday started off with this reveal of this new China AI company called DeepSeek,
Oh, yeah.
which supposedly is a cheaper, more efficient version of ChatGPT, and all the AI stocks got hit. What are your thoughts from just the beginning of the week and where we're at now?
Okay, let me break that whole deep seek thing down to simple terms for people to understand. Right? If you were presented with, for instance, the investment of a lifetime, somebody came up to you and said, "Hey, I've got this amazing thing that you can invest in. You're going to make a whole bunch of money. You know, give me your money," right? This widget, let's call it a widget. And then all of a sudden, you're putting this money, you're being asked to give even more money, and you're giving it willfully because other people are jumping in on that deal. And then somebody comes by and says, "Hey, what you're investing in, I just created the same exact thing. It does the same exact thing for not even a tenth of the cost, but a hundredth of the cost. And it doesn't require all that other stuff that you've been thinking it needed. It doesn't require that much stuff." Would you be pissed off as an investor? You'd be like, "I've been duped," right? Well, that's this whole story. That's what this whole deep seek thing did to us on Monday, right? These big companies have been coming out with this proprietary language model software that, when I say proprietary, it means that you're not allowed to look under the hood. It's secret, right? And it has to require these really cutting edge chips made by, I don't know, a company like Nvidia, right? And then it also uses a bunch of buildings. We need to get real estate. We need to build buildings. We need to get power to these buildings because these computers that this special software runs on, but this software is going to change the world, right? So people have been investing last 2 years in record numbers. I mean, people have this fear of missing out. They've been investing in record numbers in this thing called AI, right? Chat GPT now partnering with Microsoft. You've got Meta developing their own one, Google developing their own one, and then there's subsets of AI all over the place. It's like inundating our life. We're hearing about it in medical, we're hearing about it just about in every aspect of our lives. And they're telling us that invest in power companies because these new AI buildings are going to require a lot of invest in Nvidia because they're the only ones who can make these chips. And then you got this other guy come along, namely China, who, by the way, the US doesn't let Nvidia chips, get sold into China because these Nvidia chips are so cutting edge. They put an embargo on. Now, I'm not sure, I'm sure there's a black market, and I know that, this model that China created called DeepSeek, um, probably doesn't use those NVIDIA chips anyway. They use a lesser chip, and, we've invested close to, who knows how much we've invested so far into this whole AI movement. I'm sure it's in the billions. I mean, I know the hard costs have been coming up at like over a half a billion, but I'm sure there's more than that in there. And China comes out and says, hey, check this out. And it's like the number one downloaded software right now on the Apple Store. Check it out and see what you think, and guess what? It's just as good, at least when you look at it, as these Microsoft ChatGPT, the Meta, the Google. It's just as good as those solutions. It's open source, which means that, anybody can look at how the code works. In fact, they are open to that idea. They want people to, like, who are coding to, like, come in and, like, help make it better, right? And it doesn't use the fancy chips. It doesn't use all the electricity. It doesn't require all the buildings, and it's just as good a product. At least that's what it seems like. So yeah, investors pulled their money really quickly on Monday from all these, like, this bill of goods that they've been sold, saying, oh my God, if somebody's already got a widget at a hundredth of the cost, and it's open source and there's no secrecy around how it worked, blah blah blah. So they pulled their money, but they didn't pull their money from the market, Sip. If you take a look at our equal weighting index that we like to look at every week in this show, they didn't really pull their money from the markets. They just pulled their money from those big companies that have been, like, soaring in the last 18 months on this AI story. And instead, they took their money and they put it into some solid bets like Costco and Walmart and things like that that aren't AI based. They're just solid companies that, like, work. Look at the price of gold. The price of gold has been soaring. People are like, yeah, okay, I'm just going to take my money out and put it into a sure deal.
Yeah, and if you go back to the SPX, the most interesting part about it is it's like the news came out on Sunday. Like, I was watching football and I was scanning my Twitter, and all of a sudden the futures market is down like 300 points on a Sunday night with that huge gap to start the week. And I'm, scanning the internets because, and the reason that I was looking is because I know that last episode we talked about there maybe being a potential top and the S&P being in that red area. And so I started to think, well, could there be a reversal, and how long would it take to get there? Sure, it took 2.5 days, and the market opened on Sunday and we tanked. And I downloaded the DeepSeek and I started to do the search, and it was comparable to ChatGPT, all that other stuff that you mentioned. I think the average consumers are like, how many of these AI things can I use now? Because even midweek, Alibaba, another China company, released their AI, and that's even supposed to be better. And so it's a very interesting take, but I think from our perspective and for our viewers, it's how do you value these things? How does the money go into a name, and how do you get a return? But it seems as if since the news Monday, we have recovered on a variety of things because the rest of the week was just full of other information.
That's true. And, it's too soon to tell whether these other AI solutions are actually comparable. But man, that was some bad news. And, there's a huge PR engine here, right? In the States. And so Meta and I've heard that they've all got, hired the best, first of all, engineers to kind of see where they can, there's damage control happening. The engineers are seeing, comparing the two models so that they can then tell the marketing people and the PR people, hey, make sure you emphasize that the Meta solution has XYZ. So, they've been doing a ton of damage control. Money has been flowing back into the techs. Let's look at, instead of the S&P, let's look at one of the companies that was affected the most. We mentioned it. It was Nvidia. You know, they reeled about what, 10, maybe even close to 20% in price, but they're already kind of recovering. They're making sure. Nvidia is a company that knows how to, deal their technology. So, it doesn't look like it was anything more than a transient external stochastic shock, but it's kind of prepping us as investors for more of this, right? And it was very interesting because if you remember last week, towards the end of last week, there was a lot of hoopla around the new administration here in the US signing, removing regulations from AI technology, and also signing that they're going to be, as a government, doing a huge investment in AI. And then, ironically, right after that headline comes out, China releases their headline regarding DeepSeek. So it's really interesting. It's almost like some of these big players in the world market are actually kind of wondering if our new administration needs to be checked.
Yeah, and I know that another concern that came up from the DeepSeek was, because it's a China company, similar to the TikTok story, are they stealing our data? Are they hacking our phones?
Oh, absolutely. Absolutely, right? And I think I was watching one TikToker who was doing a deep dive on DeepSeek, and he's like, "Listen, I actually asked DeepSeek about things in China's history that were controversial, like Tiananmen Square," and DeepSeek's like, "Don't know much about it."
Y-
Right? So there's definitely some back end manipulation on that model, but how many of us are going to be using AI for that kind of history? you know it's a proof, and investors are, they're weary because they're putting a lot of emphasis into this, this dog and pony show they were given by the companies that want their investment dollars. And when all of a sudden somebody comes and says, I have the same widget for, that's going to be something we need to watch. And we also, we got to be very careful with all the, who are out of our control, who can, take the wind out of our sails. Every time we try to give some good news, they're going to come back and say, by the way, the US has egg on their face.
Yeah, and I mean, the global tensions, I believe, are just, I mean, President Trump's only been in office for 2 weeks as of today. And yesterday's big headline was the 25% tariffs on Canada and Mexico. And so trade wars, I think, are a brewing, and the rhetoric going, at least from our side to the other countries. But let's get back to the markets and talk about ways that we could take advantage um, build up our portfolios. The rest of the week, we did have some other news, right? The FOMC meeting, I believe everyone was waiting for that. But if we had to extract, what moved the markets this week, that was lower on the list because they left rates unchanged, kind of didn't really say things one way or another. And, today we get some more inflation data, which I think is what's driving the market up. From an economic perspective, AJ, what is your take on this week's news?
Well, so FOMC meeting is all about reporting on monetary policy. So there's two things working here: is monetary policy and fiscal policy. Monetary policy is the broad, almost macro approach to the US economy. economy? How do we make sure that, so on the monetary policy side, things seem to be at stasis right now, right? They're not ready to drop rates. In fact, we don't think they're going to drop rates until probably late spring, early summer. If things continue on the pace that they are, things are still a little bit hotter than they want. But, we saw in the last meeting minutes that, they're having this dialogue. It's no longer one way or another. And so it's kind of at stasis. So I don't expect that monetary policy is going to change the news very much moving forward. But this fiscal policy thing, I think a lot of people are going to be focused on that. We had a lot of news, durable goods orders. It seems like planes and automobiles aren't doing as well as they had been in the past, but other things like appliances, they're doing just fine as far as how many of them are getting ordered and manufactured. Consumer confidence seems to be taking a little bit of a dip. So consumers are starting, and that's always worrisome. So we're going to watch consumer confidence. That was reported. GDP numbers are starting to go down. So we got our first GDP number for Q4, and it definitely wasn't up there with Q3. Now that was the advanced number. They're going to come back and revise that number every week. What else did we get? Oh, today we got our personal income and outlays number. Expenditures, we're still still buying a lot more stuff. That was a little bit higher than expected, but it's probably on more of those volatile price things, especially things like eggs. There's been that bird flu thing. So the price of eggs is up big time. And so, because when you look at core prices, they're stable, right? So we're spending more, but we're spending more on things, usually those volatile components are food and energy. So, and energy actually seems to have subsided a little bit too. So it's mostly, the grocery store prices are high, but they tend to fluctuate, especially if you have to kill off a bazillion birds because they're all sick.
I did see an interesting one this week. This is coffee. Coffee hitting an all-time high, which, I love drinking coffee. So this is one of those
Oh my gosh.
doesn't get talked about, but looking at the chart,
Tariffs.
I'm like, oh,
Tariffs. So that's funny you say that, because my wife doesn't function until she's had her first cup of coffee. She comes out of the bedroom like a zombie. And it's so funny. She came up to me and she's like, "What's going to happen to the price of coffee with tariffs?" And I'm like, it's going to go up because, we don't grow coffee beans in the United States, nor will we ever. So if we want our cup of Joe, we're going to have to expect, 25% increase or more in a price of a cup of coffee. The futures market is already starting to price in these tariffs, even though they haven't kicked in yet, because that's, coffee is one of those things. It's funny you bring that up.
Yeah, that one caught my attention. All-time high, 6 consecutive days in a row. I did want to revert back to the S&P and maybe get your colorful bars,
Yep.
or because I know that a lot of the storyline that we've been talking about the last couple of weeks is maybe the market's not going to go make new all-time highs. Maybe we're not going to pull back, but we're going to kind of stay in this sideways action. And from our conversation last week to this week, that continues to be the case. And I'm wondering if the next couple of weeks we can continue to stay in this range and utilize some strategies to take advantage of the time because of the uncertainty or the areas that we're bouncing. What are your thoughts on that?
Okay. I do a lot of technical analysis, right? Technical analysis, you have to understand, because a lot of folks also do technical analysis. But I haven't there's only a few very good technicians out there. And then there's a lot of people who buy a book or buy a course, and they're said that, somebody who says, use stochastics, use MACD, and then they use RSI, and they use them, but they really don't know how those things are derived. They just kind of use them, and then they call themselves a technician, right? So one thing, and I want to keep it easy for our viewers, Sip, but one thing you have to know about technicians or technical analysis is that it's all built on repeating patterns. And people might not remember this, but technicians had a very difficult time in 2016 to 2020. Why? Because we had a lot of rhetoric moving the market, creating unexpected patterns that were not repeating themselves, right? And I have to, it's not, I have no, opinions really on some of the policies that our new administration brings in with them. But for instance, here in DC, right, we just had a plane crash literally 4 miles from where I am, right? And the NTSB comes out and they're like, hey, we've got a lot of research to do. We don't want to point fingers. We don't want to, come to any conclusions until we get everything in front of us and really figure it out. We haven't even found the black box from this helicopter yet. As that press conference is going on, our president in chief goes on Truth Social and says, the Black Hawk helicopter was flying too high, crashed into the plane. The military sucks, right? That wasn't word for word. I'm paraphrasing. But, the fact that they give the guy the tweeter, right? And he tweets rhetoric all the time and doesn't quite want to take responsibility for moving the news needle, moving markets. The guy is the president in chief of the most powerful country, and whatever he says matters. And he moves the markets with these thoughts, right? So, just like all of a sudden he's created this whole story around what happened with the plane crash, even though it hasn't been actually researched yet, right? Because he thinks that his opinion is fact. Well, he does that with the markets. And so it's going to be very difficult for technicians moving forward. And I wanted to say that story, Sip, because here I am using my technical analysis, try to get an idea of what the markets are going to do. Let me put my rainbows on here. And I almost feel like it's a fool's research project, because the patterns aren't going to be repeating themselves every time he goes on the tweeter and gets investors to move one way or the other with his statements. It's almost like this thing with GameStop, right? The guy goes on the tweeter, and then all of a sudden a whole bunch of, and I'm definitely calling out my age here, calling it the tweeter, but you get my point. The Roaring Kitty goes out there, and then all of a sudden a whole bunch of money flows into GameStop. It's not a repeating pattern. So coming back to my technical analysis, I just want to give you that disclaimer. We didn't get that top reversal we thought we would get. Now, I shouldn't say we didn't get our top reversal. We didn't get confirmation. You can see here, I never got my red arrow, and I never got my crossing of, I get a red arrow when this blue line crosses this pink line, and you can see it didn't. So this wasn't considered the top yet. In fact, it looks like, it was kind of a fake out because of that DeepSeek thing, but we may even go higher than where we landed, last Thursday. So we're waiting to see how high the market's going to go, because that was not a reversal like we thought it would be. And then, it's too soon to tell. A lot of people saying, hey, this is a pretty big kind of rally we're having. And I'm still chalking it up to, despite the little, detour with DeepSeek, I'm still chalking it up to a Trump rally 2.0. But the scoop is this is not considered a mature channel yet. A mature channel has 2 tests of support and 2 tests of resistance. So we've got basically this one move that's happening, and we have to kind of wait and see what happens next. The only thing that I like to do at the end of January, SIP, is I like to look at where we started at the beginning of January and where we ended at January. And one of the easiest ways for me to do that is to simply look at the monthly bar. And so if I come over here and zoom in on my monthly bar, let's remove a lot of my drawings here. Sorry, guys. So this is the January monthly bar from where it opened to where it is right now. A lot of times what happens in January specifies what's going to happen for the year. Not always, but a lot of times it does. So this has been a pretty up month for us. So there's no reason why I don't believe it's going to be an up year.
That's a very interesting take, and I feel bad for the technicians because there are a lot of them, and even the AI technicians, they can't
Can't keep up.
with the stochastic, right? Like it literally yesterday was Trump this, earnings that, etc. I do have one final follow up before we start to dig into some, our
Earnings plays.
review from last week, but that's the VIX, right? When I'm watching the day to day markets and I'm seeing these swings 20%, 2%, 5% up and down, my assumption is that the VIX should start to creep up, but we're continuing down here at these levels, what the 15 mark that we like to look at. And, it seems as if we're withstanding the volatility, or it's just become more accepted.
Well, I have a different theory. So the VIX kind of tells us the use of options as insurance policies, right? And so people, I should say, big money investors, big money stock traders use options to insure their positions when they are worried that the stock is going to go off trajectory, right? And so when they think that the stock is going to go off trajectory, they'll buy options as insurance. And we see the VIX go up, telling us that, hey, there's this uptick in purchases of insurance, of hedges against the stock market going off trajectory. There must be something that's worrying investors. What I have seen in analyzing the inflow of money into equities is that it's a lot of money recently. And again, I think it has a lot to do with following this AI trend that otherwise wouldn't be in the markets. It's not money being controlled by your typical mutual fund, pension fund, hedge fund traders, right? It's actual people coming in and being like, I want to buy NVIDIA. I want to buy Google. I'm hearing all this news of AI. I don't want to be, I want to buy Tesla, right? Because Elon Musk is running the country, right? I want to do this because it seems like a good play. And it's a lot of money that otherwise wouldn't be into equities, and probably is by investors that don't know about how, aren't experienced with the use of options. They're just buying stock because they got FOMO, fear of missing out. So I wonder, and I could be wrong here, because I'm seeing the amount of money in the markets is now swaying. It's still predominantly, don't get me wrong, it's still predominantly fund traders, but a lot of it is, a bigger percentage than I've seen ever is retail money. And I'm almost wondering, is the fact that the VIX isn't jumping up simply a matter of there might be a component of the traders that don't know how to use the options as hedges? And when I talk to folks interested in our trading school, SIP, over at Trading Trainer, a lot of them are coming and they're like, hey, I've been trading stocks, but I don't know anything about options. And you're like, oh, interesting. And that also is my data point. that's ticked up in like the last just year.
Yeah, and I mean that's why we started the show. Let's go ahead and pull up your links page. That's why we broadcast. That's why we've got this quick links in the chat, so that if you are watching and you want to know about how to use these options, I mean, just the basic premium selling on your portfolio. If you've never done that, that's a very basic concept that can kind of get you that monthly paycheck, almost like an insurance premium. But head on over to the link over here. Scroll down to AJ's register for free workshop. This is going to be the best place to get some of those intro strategies and to learn how to use these premium selling strategies to generate income like a paycheck. It's a beautiful thing. There's some other good stuff on here. AJ socials. Learning more about Trading Trainer, the entire program, learning about the coaching program, and AJ's free indicator suite. So you're going to see some red line or some red arrows, some green arrows. Head on over there, get access to the portal. It's completely free. You're going to get some good stuff in there. And then, if you're interested in becoming a member, joining the program, getting in on some of the behind the scenes stuff, there's definitely going to be information sent your way on that. But it's a busy week. We've got a lot to go through. We've got earnings coming out. I know AJ had a good Boeing play from last week. We've got another earnings set up. We've got our speed round, but we're going to take a break here for a moment. We are broadcasting live. Beautiful, wonderful, beautiful people. We are broadcasting live. If you want to throw a name in the chat that you want AJ to run through, if we have some time, we will. If you have any questions, throw them in there. Otherwise, we'll be back in a jiffy to talk Boeing and I think what is up, AMD, the chip name. So sit tight. We'll be back.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right, AJ. So, sad news with that airplane crash that it sounds like happened not too far from you. As we talk about an airliner and making money on the airline names, there's been a lot of drama in the airline industry the past couple of months.
Oh, totally. Past couple of years, right? Now, we called out Boeing last week as my pick of the week. And this week we decided to do an experiment on our earnings play. And I wanted to share that with you guys, right? This is kind of our special segment. This is our volatility crush after earnings. And we've been talking about the values of using a calendar, or more academically called horizontal spread, in order to trade earnings, because these calendar spreads go up in price when the volatility crush happens. And just to remind everybody, the implied volatility crush happens because people buy insurance leading up to the earnings announcement, and then as soon as the earnings announcement's over, they sell that insurance back. So they protect themselves just in case the stock price goes off the rails, goes off trajectory. And then when they don't need that protection anymore, they sell it. And so they basically, this is a predictable pattern. And I think the reason why we're featuring this strategy a lot now is because it doesn't just have to happen at earnings. Whenever there's something that raises fear in the markets, we could probably profit off of it. This volatility rush and crush, that might be more predictable than even trading a stock price up or down, is trading this implied volatility rush and crush. It might be more predictable moving forward. I'm forecasting that. So back to the more traditional use of this is on a earnings play. So we featured Boeing last week, and we said, hey, Boeing is coming up and they're reporting earnings on Monday after market close. So we should, buy a calendar spread ahead of that, And so you can see we bought 6 different types of these calendar spreads. And then the next day, sell it back and see what we do. So a couple things happened on Monday. First of all, we had the whole DeepSeek thing, right? The reason why we liked Boeing is because Boeing traditionally doesn't move so much in price before and after their earnings announcements. But of course, we had this DeepSeek thing happen, and a whole bunch of money came out of the AI investments and was looking for other investments to go into. And guess what? Boeing wound up being one of those investments. And so we weren't actually able to get out of the trade the next day in the morning like we traditionally like to. What we try to do, SIP, is we try to get out of the play when the stock is roughly at the same price as when we got in the play. So we had to wait until the afternoon. The Boeing price shot up on Tuesday, and then it came back down by the afternoon because Boeing isn't like the best place you want to put money, even if you're in kind of a, uh, a, a crazy situation where you want to put it somewhere and not have it in AI, right? So we waited till the afternoon. So you'll notice a lot of these trades before earnings were at 3 o'clock in the afternoon, but the trades the next day were not until the end of the day as well. So that's kind of an offset to what we usually do with this strategy. But still, let me explain my experiment here. So they're all calendar spreads. They all are at the strike price of 175, which is roughly where Boeing was trading on the day right before earnings, right? There was 175.66, 175.53. I tried to do all these trades within about an hour of the market closing, an hour and 15 minutes. So the price of Boeing was roughly around $175.50 up to about $175.75, plus or minus a couple pennies. And so the only thing that I did differently per trade is some of them were call spreads versus put spreads. And I also changed up what front month option I used, basically the expiration date. So these first 2 trades you can see here, I used the expiration date of today. I used a weekly option expiring today. So it was only going to be 4 days to expiration. So you can see here for the call spread, I bought it at $5.49, and on the next day I sold it back at $6.45 a share, basically making 17.5% for less than a day being in the stock. The put spread did a little bit better at 23.6%. I bought it for $4.40 a share and sold it at $5.44 a share. But I also wanted to see what would happen if instead of going out to that Friday, I went out to the following Friday. So this is next Friday. If I use the front month options that expire on February 7th, well, I don't do as well, right? And that kind of makes sense. The more volatile options, the ones that people are using for insurance for a quick little event, are the ones that expire quite quickly. So the January 31st ones expire more quickly than the February 7th, right? So call side, $4.53 in, $5 out for an ROI of 10.4%. Put side, $3.53 in, $3.89 out for an ROI of 10.2%. And then finally, some people don't like to trade the weeklies. So I said, well, the next monthly is the 3rd Friday of February, February 21st. And so in this case, we bought for $2.80. We sold for $3 on the call side, ROI of 7.1%. And on the put side, ROI of 8.2%. Now, one last thing I can put in there is everybody might be saying, well, then moving forward, I'm going to go ahead and always do this one. There's a reason why you might not want to do that. And that is kind of like the same situation we got into with Boeing. The ideal thing to do is get in and out of these trades when the underlying symbol price is roughly at the same place. What if it spikes up and takes like a week or so to come back down. You don't have a week if you use the January 31st, right? So that's why a lot of people go 2 weeks out. They do take a possible haircut in the possible profits, but it buys them that extra time should something go wrong. And then finally, why would you use the monthly instead of the weekly? Well, there's oftentimes more liquidity in the monthly. So if you're doing bigger positions, like more than a couple contracts. If you're doing 20, 40, 60 contracts, you probably don't want to be doing the weeklies. There might not be enough liquidity in that options chain for you. So you're doing the monthlies, and you're doing that because you're doing such big positions. So you're going to, again, take a possible cut in potential profits, but at the same time, you've got enough liquidity that you're not going to be caught with your pants down. So that's why we wanted to feature all the variations of this trade. And it was kind of enlightening to me that, hey, you could go out monthly versus 2 weeks. And, you know, the ROI isn't that different, 8.2% versus 10.2%. But you get the liquidity bump, and you also get, all this free time to make good on a trade that maybe goes bad. So, you're always weighing things as a trader.
Yeah, and I'm sure that the earnings date versus when expiration is coming or approaching has a variant in the equation for the results, and some stocks are going to be a little bit different because of the day of their earnings
Absolutely.
call and things like that. But this is a really interesting breakdown, AJ. I hope that the viewers appreciate it because it's a nice little comparison for the time components of the option of the crushes and rushes.
Absolutely. My knee-jerk reaction is for most of my trades, if I'm doing them on Monday or Tuesday, there's enough time if the expiration is on Friday. Now, if it's, Wednesday, Thursday, then I might want to go out to the following Friday. And again, if I'm doing a very large position, well, then I'll probably want to go out to the next monthly. So that's kind of a rough guideline for you guys to use, but here it is in an actual experiment on our pick of the week last week.
Awesome. So that's the airline industry, and these calendar spreads continue to be the hot topic over in the trading community, at least our trading
Absolutely.
community. And this week we're hopping on, or at least you're looking at one of these AI chip plays in AMD. AMD Advanced Micro Devices is your pick of the week. What are you looking at? How are you setting it up?
Same thing, guys. This is going to be another earnings play for me. Now, why am I going after AMD? Well, AMD is not really one of the AI plays, right? And it's also not one of the plays in the Infrastructure Act, the CHIPS Act that was passed a couple years ago during the Biden administration. That was Intel, right? So AMD is kind of the red-haired stepchild. I like stocks that don't have the headlights on them because they create predictable patterns, right? And that's what I like to trade. I like to trade the sure thing. I don't like to be speculative. I like to know that when I put $1 in, I'm going to get more than $1 out. I don't want to play games, right? So what I know about AMD is that for the most part, the stock isn't too crazy before and after earnings. And that means I can play that volatility rush and crush and not worry about trying to, defend myself against these directional movements in the stock. So AMD is getting ready for a Tuesday earnings after the market closes. So Tuesday during the afternoon session, I'm going to be taking inventory of where AMD is in price. I'm going to be doing a little bit of research over the weekend to see if I've got a bias at all on the earnings. It's not as important, but I'd like to get kind of, read the news headlines, get for myself a feeling on whether I think the earnings will make it go up or down, right? On Tuesday afternoon, I'll look at what price AMD's at. I'll look at what options strike prices are close to that. I'll create for myself a horizontal spread. I'll probably use that March option if there's one somewhere around March, April for the back month. For the front month, I think since I'm, bringing it to Wednesday, I won't use that Friday's expiration. I'll go to the following Friday. Or if I'm worried about liquidity, I'll go to the February monthly for my front month. And then I'll just trade it and then look for the opportunity. Again, I'm going to ideally get out the next morning, but I'm specifically going to look for when the underlying stock is roughly at the same price as when I bought my calendar spread. And that's going to be my trigger to sell the calendar spread. We'll see what I do, how well I do.
So in a simplistic explanation, you're expecting there to be a little bit of a reaction over 24 hours, but for the most part, if the stock price ends where it was before earnings, that's the best case scenario for this position.
Yeah. What we're trading here is not necessarily a movement up or down in stock price. What we're trading is the anticipation of the news being released and then the relief after the news is released. See, options are so flexible. Options allow us to profit on all sorts of different things besides just the price of the underlying stock. So in this case, for me, I'm not really concerned. Will there be a pump up or a bump down in price? I don't want to worry about that because that's very speculative. That's very like gambling. But what I know is going to happen, guaranteed on every earnings play, is leading into that. People are going to get anxious and they're going to hedge their investments, raise the price of options, especially those front month close to expiration options. And then after the earnings is released, there's going to be a relief. The people aren't going to need those hedges anymore. They're going to sell them back. It's going to drop the price. And that's when I'm going to go ahead and buy to close that option. So I'm basically trading into the gains.
Yeah, and it's wild just seeing the movements this week. I mean, Tesla, Meta, Apple yesterday, when that earnings come out and people are analyzing revenue forecast, there's just a lot going on. But I think you're right. After a few hours and things start to dwindle down, I think that anxiety drops, and that theory is consistent over time. So we'll continue.
It's not even a few hours, Sip. It literally is minutes. It happens in minutes. We're actually, and this might be a palate wetter for some of our show. We're creating a tool with all of the data. I'm a data cruncher, and we're creating a tool probably released maybe in Q3 of this year, where we can look at the actual volatility drop after earnings and how fast it happens, like on the minute by minute scale. It's going to be a neat way to visualize, what I'm talking about, where we sell that front month the day before when it's at a peak, and then it literally drops off in the first hour of trading.
All right. Once again, the link to those goodies is in the chat. Also, we've got it scrolling down here at the bottom. That's what AJ likes this week. AMD, we'll check back next week to get a take on what happened. But we do have a few names from our audience, AJ. They want to know what you're thinking about a few of these specific names. So it looks like we got about 10 minutes left in the show. So speed round, we'll get your take. David from Houston, Texas wants to know AST Space Mobile, ticker symbol ASTS. I believe this is a new one for the show. ASTS.
I think it is. I think this is a satellite company. Newer satellite company. Let me go ahead and look at this chart really quick. All right. Satellite company. Okay, I see. I'm thinking that you want to sell premium on this, and you're wondering, should you buy the stock and then try to sell the premium on it. Let me pull up my options lookup tool, ASTS. Let's just take a look and see if the option chain is healthy. This options lookup tool is included, by the way, for free if you sign up for free access in the free indicators in our site. So I want to go, 3 to 6 months out. I'm going to look at these April options, trading every $2.50. Liquidity doesn't look too bad. It doesn't look stellar, but it doesn't look too bad. Okay, I think we can work with this. So here's my suggestion here. Let's wait for. So I've got my fast MACD. This is one of our free indicators. This is calculated on VWAP. And actually, I just looked. It's not this time. I have it calculated on close, but I usually like to calculate it on VWAP. And I would wait for follow through. Make sure you get follow through, because I'm seeing how these signals tend to come and then we don't get the follow through. So let's make sure we get follow through before we start buying this stock. And we would want to buy this stock in lots of 100. And then you just simply wait for a top signal, or set yourself a certain amount of gain and then put a collar on there. So you're going to sell your near-term call premium and buy a protective put with the strike price near your break-even price. And then you've got a hands-off trade. You can just wait and let those, monthly dividends come in off of the stock, monthly premiums come in. I think you might have something here, but don't trade it until you get the signal.
Yeah. Designer and manufacturer of satellites based in Midland, Texas. Space-based cellular broadband network allowing existing unmodified smartphones to connect to satellites in areas with coverage gaps. I don't know. Sounds like Elon's other company, the Starlinks.
Starlink.
Yeah. Yeah. I think there's some love for the satellites in this new administration and in 2025.
And in Texas.
Yeah, exactly. As we, move forward with, technology and things like that. All right. Thank you for that, Dave. And it looks like Dave is out of Texas. So he knows, he might have some insight as to what they're doing there at AS Space Mobile. So thanks for that, Dave. Staying, close to the region. Aaron in Little Rock, Arkansas, wants to know about GameStop. I know we've talked about this a lot, ticker symbol GME, but it seems to be been out of the news for quite some time. What is your take on GameStop here?
Well, I see GameStop is forming a little bottom. We got a signal with our indicator. In fact, it's bothering me, Sip. I'm going to load up our free indicator here, and I'm going to change how it's calculated from close to VWAP right in front of everybody. And you'll notice it's set with the fast MACD parameters, so 6, 19, and 3, so that I'm getting a slightly better reading. When I calculated on VWAP, that including a little bit of volume validation into whether I get an arrow or not. So I see here that I got a end of day signal on the 29th, so 2 days ago. I'm not seeing that we got very good follow through to that. So until you get follow through, you don't want to act on it. But you know what? Here's what I'm going to say about GameStop. Like I mentioned earlier with Roaring Kitty, you get a tweet and then GameStop's either out of the ballpark or it's dropping, whatever. When you're selling premium, there's two places where you don't have anything to worry about. One is when you're not in it at all. So when you're in all cash and you're not even touching the stock. In that case, who cares what happens to GameStop? You're fine. The other time is when you have premium sold and a protective option purchased. That's called collaring it. And the reason why people like to collar their stock trades is it creates an automatically adjusting position. You can't lose once the collar's on, because that protective option, will keep the position from losing any money, right? Yeah, I'm simplifying it, but so if you buy some GameStop at this current low that we're at, I don't see anything wrong with that. What I would recommend, though, is sure, let it go up in price a small amount, however much you think it should go up in price. It's currently at about 27.75. Maybe it goes up to 30 or 32. Fine. Put your collar on, and put a collar on and have a collar on every other month. You roll in and out of these collars. You'll get income off of them, and it'll protect you from any sort of surprise news that could cause the stock to go either up or down unexpectedly. So I don't see any reason why, when you get follow through, why you might not want to buy some GameStop and get into the game, but then use collars smartly so you don't get caught with your pants down.
Yeah, we've got some more exciting names in the ecosphere these days. GameStop has definitely lost its steam. Maybe that's a good thing. Maybe they can start to, not be a meme stock and go back to being a legitimate company. We'll see.
Roaring Kitty's been out lately. He was quiet for years, and all of a sudden, he's out there tweeting more. Or it's not called tweeting. Is it called Xing now, or is it still called tweeting? I don't know.
I think it's still called tweeting, but it's X. So I don't know. I might have to look into that and get back to you on whether we're still tweeting these days. But we have brought it up a couple times. All right. Last and final name. AJ, looks like we have a potential earnings play coming up on the 6th. Tanya from my hometown, Chicago, Illinois, wants to know, do we have a potential setup in Honeywell, ticker symbol HON? What are you seeing?
Yes. Look at that. Honeywell, let me go back a whole year here to look at. So this one, investors kind of hammered Honeywell a little bit. Here, investors just blew it off. Here, tiny bit of correction. Here, a little bit of correction. Okay, so what I'm seeing is, first of all, I'm not seeing so much correction that the calendar spread. So corrections like this play against the volatility gains you could have. So if you don't have any correction, that's why we like to, attempt to get out of our calendar spread at the same price that we got in, because then you get the max from the volatility crush. So first of all, it doesn't look like the corrections are so extreme that you couldn't recover, that the volatility crush would totally be eaten away by the, movement. So that's number one. Number two, it looks like in most cases, within a week, if not 2 weeks, the position recovers its price. And so I don't see why that, we can't trade that this week. So going back to my little experiment on Boeing, you may consider, if you want to do an earnings play on this, going out 2 weeks with your front month option instead of just one, or play it extra safe and go out to February 21st and use the February monthly. And then maybe use, instead of March, use an April back month. That's going to, help you have some extra time to let the stock price recover up or down after earnings. It'll give you a little bit more flexibility. But yeah, you could do this. I almost think that there's some earnings plays out there that are going to be lower hanging fruit. But yeah, I think this is on the table.
So essentially, you're saying there's not going to be as much anxiety around Honeywell because it's a more traditional business, not as many swings.
Yeah, Honeywell, everywhere from retail to government to commercial. Honeywell's, look at their earnings, right? they earn, 1% on every invested dollar every quarter, more than 1%. And then they give a very healthy dividend back to investors, so I'm not worried about Honeywell disappearing anytime soon. I think you could totally trade this, but be prepared. Don't expect it to work for you, the night before and the morning after. It looks like investors do scrutinize the earnings announcements and then trade it accordingly. You might get lucky. I see a couple of earnings uh, earnings in the past that there it was a nothing burger, but then I see some where there's moves. So just be prepared.
All right. Thank you for that, Tanya. Our last and final name in the speed round. AJ, heading into next week, into the month of February, what do you have on your mind? What are you looking at? What are you advising the community?
I mean, let's see if we can't find the most boring stocks to put the majority of our portfolio in and create that income engine, right? Our goal is really to grow our portfolio, to double it every year. That means we have to grow it by about 6% every month. And you can do that with our premium trades. And we want to focus, let's find the ones that aren't going to be in the news, right? So I'm going to be looking for as boring stocks as I can. Earnings season is still in effect, so I'm also going to be looking at those earnings plays. And I know what I have. Some people have amnesia, but I remember 2016 to 2020, and I remember trading 2016 to 2020. So I'm also going to be thinking about how we can trade using options. Some of these, new, I'm going to say new is normal, where headlines are ruling, right? Because that's what they did in 2016 and 2019. And we traded a lot of volatility in those times because it's just up, right? It's just up.
Yeah, and with that, once again, we want to invite everybody to check out AJ's Quick Links page. We've got a bunch of good stuff. Show some love on the socials. Please hit that like, hit that follow, hit that subscribe. Feel free to drop a comment. AJ's been doing a great job of getting some hot trending topic videos out there. So hit that comment button. Let us know what you think. Otherwise, yeah, things are really rocking and rolling to start the year. I also remember 2016, and it seems like we're in for a much bigger roller coaster this year because
roller coaster. That's a good way to call it.
Policy changes. The last administration was just rhetoric of trying to figure out, who is trying to take me down and da da da. Now it's just like policy. And I don't know. We'll see. But from our perspective at Trading Trainer, no matter who's in office, we're always going to be continuing to find ways to take advantage of these beautiful option tools. And so we appreciate you guys tuning in. Appreciate the love. AJ, thank you for your time today. Everyone, thank you for tuning in. If you have any questions or comments, you hit us in the DM, leave a comment in the chat. Someone will get back to you. Otherwise, stay safe. Have a wonderful weekend, and we'll see you guys next week.
Bye, everybody.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.